keep asking me if they should sell everything in anticipation of the rumored recession, the one that the experts can't stop yakking about, But you know what? If you're really worried about a slowdown, if today's not-so-hot employment report makes you nervous, if the bond market's got you jumpy, the last thing you should do is sell everything. Instead, you might want to take a look at some of these slowdown stocks. And even if you agree with me that a recession is pretty unlikely, you should own something that works in a slowdown, simply because that's how you stay diversified. So here's where I come down. You want to own something defensive with real internal catalysts that should drive the stock higher, regardless of what happens in the broader economy. Something that gets an extra boost from a slowdown, but works either way. Something like Campbell Soup. Here's an iconic packaged food name that I started recommending for speculation back in April when the stock was still pretty much down in the dumps. Campbell Soup had fallen behind the rest of the industry. They were a classic pantry play at a moment when, well, there didn't seem much interest in that part of the supermarket. But then a big-name activist investor got involved, Dan Loeb, who runs Third Point. And Loeb saw a badly undermanaged house of brands. Think their namesake got Campbell's products, along with Pepperidge Farm. You probably liked a lot of these. Arnott's, okay, that's overseas. V8, I love that. Plum Baby Foods, Snyder's, Hanover Pretzels, Swanson Broths, Prego pasta sauces, and a bunch of others. So he promptly declared war on the board of directors. He pushed for some major changes, including an outright sale. Ended up installing a whole new management team. When I told you to buy Campbell 5 months ago, I wasn't too clear on where the company was headed, but I was pretty confident the stock's general direction was up. Sure enough, since then, Campbell's broken out to highest level since early last year. Stock up more than 14%. And you know what? I don't think it's done. I think it's got a lot more room to run. In fact, I like Campbell Soup more up here at nearly 45 than I did when it was at 39 in April, much more murky. Why? Because as it turns out, the activist involvement wasn't even the most important part of the story. The company's now in the midst of a real turnaround. They're really getting their house in order. And while Dan Loeb certainly deserves some credit for that, he doesn't deserve all the credit. Truth is, Campbell Soup is doing much better operationally than even in the bulls expected. And I got to tell you, I think that keeps up. I'll tell you why. First, let me catch everybody up on what's happened here. When I got behind this thing in April, Campbell had just been through a messy fight with Loeb. This was a debt-laden company with a lousy track record. Loeb wanted them to put themselves up for sale, but there was one tiny problem. Campbell Soup is effectively a controlled company by the descendants of the Durants, John T. Durant. He's the man who invented condensed soup. His family owns somewhere between 40 to 45% of the company, and they didn't want to sell. However, after a long back and forth with the threat of a messy proxy fight, Loeb came to an agreement with Campbell's board last November. In exchange for a couple of board seats and input on the hiring of a new CEO, Loeb signed a standstill agreement. Basically, he committed to stop agitating for the next year. Eventually, Loeb and the board compromised on a new CEO, Mark Clouse. He's the former CEO of Pinnacle Foods, who sold Pinnacle to ConAgra. Clouse took the helm in late December. I'd love to have him come on the show, by the way. And he got off to a pretty good start. He quickly started offloading non-core brands, including Bolthouse Farms for $510 million, and also looking to sell the cookie business. When Campbell Soup reported in February, the results were better than expected. So with the stock trading at 15 times earnings and sporting a bountiful dividend, I gave you my blessing to own the one, at least for speculation. Even though I didn't like the balance sheet, was pretty skeptical that the company would eventually put itself up for sale because of that Durant's factor I mentioned. Since then, though, we've gotten a very clear picture of where Campbell Soup is headed. I like how it's headed. I like how it looks. Company delivered a blowout quarter. That's right, in early June. That's the first time they had a meaningful top and bottom line beat in ages. Management raised their full-year earnings forecast. Even better, Clouse told us that his cost-saving initiatives were coming in ahead of schedule. They're planning for $850 million worth of savings by the end of 2022. And by June, they were already at $535 million. Plus, he was adamant that he'd keep selling non-core parts of the business, especially the international brands, in a disciplined way, no fire sale. In response, the stock caught fire, surging from 38 to 42 in a single session. 2 weeks later, they closed on that Bolthouse Farms sale. I happen to like Bolthouse Farms, but they paid too much. They brought in $510 million. Great news for the balance sheet, even though it was widely expected and it was a huge loss versus what they paid for in the business in 2012. Then a little less than 2 months ago, Campbell Soup announced another major asset sale. They're offloading Kelsen Group. That's a Danish snack food business, $300 million. We love these moves. While Campbell's has some pretty dominant brands here, iconic brands here in the U.S., their international brands were really a lot less impressive. So it makes sense to dump them and focus on what you do best. Gets better. Early last month, we learned that Campbell's found a buyer for Arnott's Biscuits. That's an Australian cookie business. They're selling it to KKR, the private equity firm, for $2.2 billion in cash. Hey, that's huge. Put it all together, and Campbell Soup basically offloading their whole international portfolio for $2.5 billion. And don't forget, they just got $510 million from Bolthouse. Suddenly, the $9 billion in debt that the company has, and a lot of it taken by paying way too much for these guys, well, it at least seems a lot less worrisome. They overpaid for this beyond all. It makes me sick to look at it. Which brings me to last week, when Campbell Soup reported yet another good quarter with strong guidance for the 2020 fiscal year. They managed to thread the needle between optimistic and achievable. The key here, the company's organic sales from continuing operations increased by 2%. That's thanks to strength in snacks, meals, beverages in the next fiscal year. They are looking for 1 to 3% sales growth, higher margins, translating that into 9 to 11% earnings growth. These are fantastic numbers for this, what was basically a dormant food company. Campbell Soup has now managed to beat the numbers for 4 consecutive quarters. While the Bears still argue this turnaround will be a lot harder than many people seem to believe, the Bulls are more confident that the company can hit the high end of their forecast for 2020. The market clearly sided with the Bulls, and the stock surged from 42 to 45 over the next couple of days. And it seems the Bears are being forced to change their minds. 3 days ago, Piper Jaffray upgraded Campbell Soup from underweight to neutral. They had to sell on the darn thing because they can't deny all of the progress that management's making. In short, the new CEO, a compromise candidate between Daniel Loeb and the board, has done a remarkable job. Campbell Soup finally has got good execution. After years of declining sales, the business is growing again. They've doubled down on their best businesses, offloaded everything else, using the proceeds to pay down debt. The bottom line, with Campbell's trading at 17 times next year's earnings estimates and still 3.1% yield, I think the stock is a buy at these levels, and not just for speculation. This thing has become investable. And if they stumble, hey, Dan Loeb's standstill agreement ends in November. So he'll soon be able to push for even more changes if they become necessary. I just hope the stock gets hit so you can get in on weakness, because this thing's real. Let's go to Doug in Iowa, please. Doug.
Jim, thank you for taking my call.
Of course.
My question today is about Kraft Heinz. Is there a price, or could management take some action that would encourage analysts and investors to get just a little more interested in the stock?
Well, you can always do that. There's always something you can do, Doug, which is why I didn't just say, hey, listen, stock stop at zero or some, glib thing. They have things, they have levers, but you know what? They have no growth. And they have no growth because they systematically cut back. There's very little innovation. They'll tell you there is, but I got to tell you, take a look at their stuff. There's nothing cooking. They need to blow the company up, and I don't know if they're capable of doing that. Let's go to Peter in North Carolina, please. Peter.
How you doing, Mr. Cramer?
I am doing well, Peter. How about you?
Good, thanks. My question here, several years ago, we purchased Sprouts Farmers Market stock at nearly $28 a share. Since, Sprouts has enjoyed growth and expansion, and you would think increased value. The share price is currently $18.50 or so.
Right.
Why is the share?
Look, you're going up against Amazon, and we don't want to go up against Amazon. Remember, they did buy Whole Foods. They're doing a pretty good job. Whole Foods does get better and better. I really like what they're doing. I don't want to compete. It's just too hard. Let's go to Jane in California. Jane.
Good afternoon, Cramer. Thank you so much for all of your help over these years.
Well, sure trying. How can I help now?
I've been in Domino's for a long time. It's been a winner. I'm playing with the House of Money, have taken off a lot. But I'm wondering if the Domino story has changed or if I should switch to something different.
It has changed. It has changed because the great thing about Domino's is it delivers. But now everybody delivers. And that's been it's not Rich Allison's work that's doing. I mean, Rich was great at international. It's just that the other teams seem like they're playing with the House's money. I think you have to hold off for now. All right, look. If you want to own something defensive with real catalyst that could still work regardless, I want you to take a look at Campbell's. Yeah, you've seen it. You go and buy it. It's better. It's just better run. I have much more mad money ahead. Looking for a home in the retail space? After yesterday's decline in at home, I'll tell you if the stock's in need of a remodel when I sit down with the CEO. Hey, then did you catch Lululemon's climb today? Talk about a workout. It's a set may have left you winded, but you know what? It should come as no surprise. I'm going to break down the quarter. And all your calls rapid fire in tonight's edition of The Lightning Round.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.